Hi, everybody. John Hodgkins with Guaranteed Rate. Happy 2022. It's great to connect with you. I want to get used to saying that. Happy 2022, and I hope yours is off to a good start. Just want to do a quick 3-point real estate update. We're going to cover the subject of loan limit increases. We're going to cover number 2, the changes to condo finance. We'll just cover the headline. And number 3, just some expectations for the 2022 market. Hey, so number 1, loan limits. Federal Housing Finance Agency, FHFA. Every month they put out a report on home appreciation. They follow home prices by county, by state. They put out a larger report that covers the third quarter, in this case, the third quarter of 2020 to the third quarter of 2021, and housing appreciation over that period of time, on average throughout the country, 18%. So what does that mean? That means that conventional loan limits that were limited in 7 of the 8 Connecticut counties at $548,250 have now been increased to $647,200. So that's an increase of over $98,000, and guess what? 18%. If you're not getting a conventional loan, you're looking at FHA loans. FHA in 7 of the 8 Connecticut counties, $356,000 prior year. Loan amount raised now to $428,800. So that's how much more buying power that you've been given. And Connecticut Housing, which in all of the counties, give or take a little bit, except for Fairfield County, $311,000 sale price limit has now been raised to $367,800. So that's good news for Connecticut Housing first-time home buyers, which right now in our market are making up over 33% of the housing market. So that's a big jump. And that's all to make the lending amounts more accessible. It's going to allow people to buy higher priced homes with lower down payments, as well as less reserve requirements. In some of those cases on higher loans where jumbo loans are needed, we're doing a great job with jumbo loans. Rates on jumbo loans are actually lower than conventional loans. So if you do need a jumbo loan, we're going to help you with that. But these loan limits are very helpful for conventional loan buyers. Hey, next topic, condos. Changes in condo financing. If you're buying and selling, you're going to want to be on the know on this. Big accident, Miami suburb, Champlain Towers South, was a 12-story beachfront condo project, collapsed in June of last year. It was a big tragedy. In the investigation aftermath, deferred maintenance and the reporting and disclosing of deferred maintenance was the big topic. And so now Fannie Mae, Freddie Mac have put out their changes to lenders. Now lenders are required to adhere to additional guidelines. And here's what they are. When you're purchasing a condo approval is part of your loan approval. And in this particular case, with projects that are attached and have 5 or more units, the condo questionnaire has now incorporated questions around deferred maintenance. Are there any special assessments on the project, either now or planned? Is there any deferred maintenance or significant maintenance, either now or planned? Are there any code violations that have been outstanding, either current outstanding or within the last 5 years? Yes to any of those questions is going to require a deferred maintenance addendum be completed, which is going to also require additional information that would be inclusive of minutes of meetings, reserve requirements, as well as other financial disclosures for that particular project. So be in the know on that. Much more to come on that. Hey, so let's end with the 2022 market expectations. A lot of talk about interest rates and why interest rates will do what they do. One, interest rates from the lows of last year to now, rates have moved about 3/8. I'm locking 30-year fixed rates, 3.125. Larger loan amounts are less than that. So that's about on a $350,000 loan amount. buying power has decreased by that rate increase approximately 18 to 19,000. So not insignificant, but not real significant. Rates may continue to move, and like I said, in a future update, we'll talk about how high are rates expected to go and why they will go that high. One thing I did want to point out is because of this 18% appreciation over the last year, homeowners who are in their home for a year or more and don't plan to go anywhere, they're going to stay in their home, you've had an incredible amount of equity increase. And I'm doing mortgage reviews for people in your situations because of the amount of equity that you've acquired over that period of time. So money, people are getting rid of mortgage insurance. You had mortgage insurance, you don't need it anymore. There's reason to take cash out. It's a low cost way to get cash out to either do a home project or to replace other high cost debt, education, number of reasons, doing a lot of those, lowering terms, and in some cases even lowering interest rates as well. So getting a mortgage review, if you're interested in that, that's a no-cost service that we do. Just direct message me and we'll talk about that. That's it for now. I appreciate your time. I look forward to working with you in 2022 and have a great new year.